All right, everyone, so we're going to continue here with Chapter 8, Setup 2, which is the ABCD setup. We actually had a great ABCD setup just today on SCKT. So this morning I hit my daily goal, doubled my daily goal actually at $20,000. And the pre-market ABCD setup, I'll show you in just a second, but it was pretty clear. It was pretty clean. It was on the 5-minute chart. The 1 minute was a little choppier, but the 5-minute was solid. So this is the traditional ABCD setup where we initially have what looks like a bull flag, and maybe we even trade it as a bull flag, but then it doesn't break through the high. It either double tops or it doesn't even get all the way to what would be a double top, and it sort of stalls out and comes back down, which is what you could see happen in this example. So the high was up here, it pulls back, first candle to make a new high. That's a fine entry for a bull flag. Now, it's possible that we wouldn't have taken that on this stock if it was really extended off its 9 moving average, perhaps, but otherwise we may have taken it. But then it doesn't go up that high, and we probably get out either with small profit, maybe a decent profit depending on the position size, or potentially a loss or break-even trade depending on how aggressively we may or may not have been adding for that break through the high. So the question there is, on that particular day, was I on kind of the offensive and being really aggressive, or was I being a little bit more defensive in my trade? Then it pulls back again and kind of forms a second bull flag. But of course here, the initial move up is very small relative to this longer move up. So buying the first candle to make a new high in here, sometimes you will see me do that, especially if I'm really confident in the setup. We have the 9 moving average right underneath it. But other times I'll wait to add at the confirmation point, which is the break over this last high. So that's we would sort of call this a pivot. So, you know, this is low points, the pivot, then we come back up, we pivot here, we come back down, we pivot down. And so if we break this level here, that confirms that we're now stair-stepping up. So stair-stepping, kind of an expression for, you know, either the stock is going up, sideways, and maybe up, down just slightly, but generally trending up, or it's trending down. So if this level here, this pivot actually broke below number 1, then we really are stair-stepping down. We're just going lower. That's not what we want. That's not a good ABCD setup. So an ABCD setup initially is sort of these 2 pivots that are in a tighter range. And then as we base out above the 9 moving average, if the stock is bullish and, you know, it meets our criteria for every other reason for being strong, then we look for that dip and then the rip through the highs. So let me show you just as an example my trade this morning. So this was SCKT. So let me just pull this up right here. So SCKT, you may recognize right in here that this, in fact, was the ABCD setup. So it squeezes up, it then pulls back, it then goes higher, pivots right there off of the high, which is 1051. So we could draw a little line right there. It comes back down and pivots now off this dip at 975, but the previous low was 951, right? So in this range right here, we're looking at it and we're saying, okay, maybe we would have gone ahead and bought the first 5-minute candle to make a new high, but maybe not, because this candle was so red that, you know, it's a big, long body red candle. That's not really the picture-perfect bull flag. The picture-perfect bull flag, you know, is more like nice green candles and kind of smaller red candles. And again, you know, this one's a little bit bigger, but this just didn't have the look at that moment of being really a picture-perfect bull flag. It kind of dropped a little too hard there. So it pops up from the first candle that does make a new high here, which is setup 1, of course, of Chapter 8 and also of Chapter 7. So, you know, and it worked. From 1020, it pops up to 1050. So a 30-cent trade. That's not bad. But then it drops back down. It drops down, but it doesn't break the low of 951, the low right here of this candle. And then as it curls here, it rips through 1051 and squeezes up to 1122. Now in this case, it is a topping tail candle where it broke through that $11 spot, but then it couldn't hold above it. Let's look at this. This is on the 5-minute time frame on the left here. And then we're going to look at the 1 minute here on the right. So on the 1 minute, you can see how, let's see, where's this? It's actually, where is it? That tapped 11, so it's actually right in here. So we got this really big squeeze from 8 all the way up to 11. That's the flagpole. Then it pulls back, and you can see it's kind of choppy here. It even did a little bit of a false breakout on the 1 minute right in there. That 1 minute candle actually made a new high and then dropped. Dips down, kind of curls back up, dips a little lower, and then all of a sudden here, it just surges through this level. It breaks 1050, and it just goes almost straight to 11. But it was so quick that as it pulls back, it does another false breakout on the first 1 minute candle to make a new high, and then just goes lower. But this still would have been an okay entry with a long at 1050. Now, although that is a little extended on the 1 minute chart, it is, and it's not perfect multi-time frame alignment, but at least we have a strong 5 minute setup. So usually the 5 minute is, of course, being a longer time frame. The 5 minute chart is a little stronger. And of course, the daily chart can also be, a strong consideration if we were running into daily resistance. But in this case, a nice 5 minute, a little extended on the 1 minute. So probably not a full size trade, but a trade from 1050 up to 11. Okay, so, and you mentioned SOS forming one. I'll just take a quick peek at that. So SOS forming one on the 1 minute. So I actually wouldn't really look at that as an ABCD setup on the 1 minute right now. So the problem on this is that it pulled back pretty sharply. That should have been the low. It should have then popped up here, pulled back and been consolidating. So right now, this is, it's coming back to its low of 1214. So this is really not so much of an ABCD setup. It's just pulling back. So we would differentiate that, from what we're seeing here, where we pop up, we pull back, and then we go right back up. So this popped up, pulled back, and then went right back lower. Then it came up, and then it went lower. So kind of like right in this area, maybe we could have said it's starting to do an ABCD setup, but because of this, what had just happened here, not so much. And this ends up, taking the form a little bit more of a flat bottom breakdown. So not picture perfect there. Okay, so let me read for you this slide on the entry, and I'll move my video up to here. So on the one hand, and let me just, I'll just make a note to fix that typo. So let's see, what slide are we on? 683.1. So on the one hand, the ABCD setup can be a little annoying because if you bought the first candle to make a new high, you had a failed bull flag breakout. It either double topped or it didn't even make it to the top. And you may have had a loss. However, remember, short sellers who traded the opposite direction are now holding through what is starting to look like a longer period of consolidation and coiling before the breakout. Stops would be either at the high or at the high of the pivot of this little area. So if this pattern begins to ascend towards the breakout price, either the pivot or the high a day, with the 90 EMA just below it, and it's a stock that's obvious, meaning many traders are watching it, the breakout could be powerful. A combination of a lot of traders who have been watching it on the 5 minute chart, who have lots of opportunities to see the setup that's forming, really, really short, fast patterns. They'll attract the traders who are already staring at the chart, but the traders who aren't already staring at the chart will just totally miss it. So an ABC setup forming over the course of 25, 30, 40 minutes, that can give the opportunity for a lot of people to recognize what's happening. That means potentially more buying into the breakout and more short covering for people that maybe are shorting with a stop just below or just above, kind of right above below the high a day mark, depending on how aggressive they are. So the proper entry for an ABCD pattern is the apex of point B, which is that spot number 2 right here. That's what I would consider to be the proper entry, because that's the obvious line in the sand. If that breaks, we've got a really good shot at getting back to high a day. Now again, more aggressive entry down here with a stop right at the low, that's okay. But there are times where a stock will go into this consolidation and just kind of peters out. The volume kind of declines. It doesn't end up really breaking to the upside. It doesn't really end up breaking much to the downside. It just kind of declines, just sort of flatlines, and people just move on to something else. So an entry down here before the confirmation of the break at the apex point could be a little aggressive, but on a stock that you felt particularly confident in, it could be okay. So apex of point 2. However, an early entry would basically be the second bull flag, the first candle to make a new high of the, sort of that second bull flag pattern. And yet another entry could be off of the ascending support trend line if it bounces off that level. So we usually would draw kind of this line here, and perhaps there's one that connects further back. And so we might be able to see as it's coming down here, or maybe as it dips back down here, a possible dip off of that ascending support line. And then that gives way into a trade where we would be able to add through the highs with a good cost basis. Adding off ascending support and adding in that more aggressive sort of second bull flag formation, both are definitely, more aggressive setups that would be okay when you're kind of on the offense, but not probably appropriate for most scenarios as a beginner trader. So the lower you enter, the closer your stop is. But of course, when you enter really low off of support, you lack that confirmation. And it means you'll probably not see an instant breakout. And so if you like that immediate resolution, instant winner, which is a setup where breakout or bailout really applies well, you may prefer to wait for the apex point that will give you that instant breakout or bailout setup. It either works right away or it doesn't. So your time in the trade is certainly shorter. Now, we know that there's the risk that they could break so fast that you don't get filled, which is why we do often like to anticipate the entry a little bit, but we can still anticipate the entry around the apex point, even though, we're waiting to the apex, we can still get in maybe just a couple cents earlier, and that wouldn't be too bad. So another note on this setup is when you take a 1 minute ABCD pattern, you'll want to see that this is occurring in the context of a 5 minute bull flag. And a 5 minute ABCD pattern should also provide logical 1 minute entries. And in the case of SCKT, the 1 minute this morning was not really as strong. It was very clear on the 5 minute, but the 1 minute was a little extended at that entry point, and that certainly would have presented, and in that case did present a little bit more risk. So we like to see that multi-time frame alignment. But the cool thing about an ABCD pattern occurring on the 1 minute is that it's almost always a 5 minute bull flag, right? Because if an ABCD pattern requires the stock to pop up and then drop down and then pop back up and drop back down and then come back up again, that's so many 1 minute candles that at that point we probably have, a 2 or 3 candle 5 minute pattern forming. And so then we have that multi-time frame alignment where we have a really clean 1 minute ABCD pattern in the context of a 5 minute bull flag. And when those align, that can be very powerful. Again, I would say the ABCD pattern is generally more powerful when it's occurring on the 5 minute chart, but no doubt when you have a 5 minute ABCD pattern, what you have on the 1 minute is sort of a long period of sort of bouncing within range. And sometimes it's tighter and sometimes it's a bit of a wider range, but the 1 minute can be a little harder to find the exact entry when we are really focusing on a 5 minute pattern. And if you're really focusing on the 5 minute pattern, then the entry is based on the 5 minute chart. The 1 minute may be a little extended, but it's a 5 minute pattern. Profit targets are based on the 5 and stops are based on the 5. So, that's fine if the 1 minute doesn't perfectly align, as long as we do have a good, valid, and strong 5 minute chart. Okay, now the target. This will depend on the form of the ABCD pattern. So sometimes the ABCD pattern will kind of be right below the high a day, in which case it's kind of resembling a flat top breakout. And some people might actually be calling it a flat top breakout while you might be calling it an ABCD pattern. So if we're talking about a flat top breakout, then a typical target would be 25 to 50 cents up to the next half dollar, whole dollar. Certainly a little higher on higher price stocks, a little lower on lower price stocks. If the ABCD pattern occurs below the highs, then well below the highs, as was the case with SCKT, then the first target is a retest of high a day, and then a squeeze through that level up to usually the next half dollar or whole dollar. Again, trading around those psychological areas of support and resistance. An ABCD pattern can still carry the risk of being a double top and a false breakout. That risk is a little bit lower because of the longer period of consolidation, but we could come up to that high, and we kind of did on SCKT and find that there's a big seller up there and then it just reverses right off that level, and then we have a topping tail or we have a very clear double top. So that will happen from time to time, but again, as long as we're cautious and we're watching the level 2, we're watching the time and sales, and we can see, of course, the buyers coming in, or we could see potentially a big seller right at that, that level, the double top level, then that can give us a little bit of a warning sign before we maybe fall into a bad trade or get caught and fall into a bull trap. Now, I would say that some of the most impressive trades I have ever seen have come from ABCD patterns. And I think it's the combination that the initial false breakout of the bull flag attracts short sellers because initially it's a sign of weakness. You have a stock that's really strong, it does a bull flag, and then as it starts to resolve, it kind of runs into a ceiling and it can't break through the high, whether it's a double top or it's a consolidation, well below the high. And so I think that attracts short sellers who naturally set stops at high of day. It then starts to pull back, it starts to look good, and then, it kind of doesn't roll over. It sort of starts basing out and kind of starting to ascend higher. And now all of a sudden, as it breaks over point B, and you get that really quick rip back to the highs, now you have something that's really looking very bullish. And now you have a combination of short sellers who are like, uh-oh, I've got to unwind this trade before it just rips on me. And you have long traders who are jumping in to ride the momentum. So it's that combination of the initial short sellers that get attracted to that pattern. And I suppose also just the fact that that 5-minute ABCD pattern takes enough time to form that a lot more people are able to participate in it. All right, so you'll see a bunch of examples of ABCD patterns in this chapter. Now, certainly a risk factor is the fact that the stock first formed a bull flag and then failed. That is weakness. But on the other hand, trapping early short sellers is to our advantage there. So yes, it is a little bit of an issue, and we may want to be mindful of, was that failed bull flag, was that because of big sellers on the level 2? Was it resistance at a $0.50 or a whole dollar? Is there anything we can sort of attribute to why that happened? Sometimes you can and sometimes you can't. In the case this morning of SCKT, I would sort of attribute it to the fact that at that time, the 5-minute chart, it had just made a really big move and then a pretty sharp pullback, hitting a high of 11 and then pulling back down to 969, then down to 951. That was a pretty sharp pullback. And so I think because of that, probably traders were a little hesitant to buy that first 5-minute candle to make a new high because you just had that huge red candle and it was sort of like, I don't know, is that safe? So some people bought it. It did pop up, but then some people probably went short, setting their stop at 11. Then it drops back down. Then as it rips through 1050, maybe they're covering on the break of 1050, just unwind it, doesn't look good. Rips through 11, up to 1122, maybe stops out some more traders. Maybe some people do go long for the break of 11, whole dollar. But then, even at that point, it wasn't able to hold above that level. So, and that didn't seem like there was any real logical reason why it couldn't hold over 11. It just popped up and then dropped back down. And this was one that was kind of choppy today. It went from 9 up to 14, then back down to 10. And, it's just kind of been a little tricky. I'm not sure why. So stop loss typically will be the low of the last 5-minute candle, the low of the previous pivot, or, of course, using arbitrary stops as long as you can be good about holding yourself to actually bailing at those places. I like to see consolidation above the 9 EMA. And sometimes this pattern isn't picture perfect. And they kind of continue flagging sideways and then eventually do give us that breakout, in which case it's sort of like A, B, C, D, and then E, F, and it just kind of continues. And then you're kind of like, I don't know, this is just a long period of consolidation. But this is what a perfect ABCD pattern would look like. It's up and then dips down, A, number 1, 2, B, 3, C, and then 4 right there, the D. So we get the breakthrough level 2. So in this particular case, $20.60 is our high a day. The low of the pivot, the low of the pullback is 1922. And then up here to 2033, that's that level right there. So that's the high. So that's our possible entry point. So we might be typing in our order for 2033 or maybe 5-cent offset, 2035, 2038, whatever. Pulls back, dips back down a little bit. Possibly on something like this, we go long for the break back over 20, psychological resistance, if we can break back over that level and then add at 2033. Perhaps we add really low, or perhaps we just wait for the break of 2033 and add, up here as it squeezes higher. And then through 2060, next target, $21. Okay, so now this one, this is one of those ABCD patterns on the 5-minute that you can see was powerful, but was not picture perfect. But what we had was a fairly obvious pivot. The pivot here was this level right there, the high of that candle. So it drops down, it kind of pops up, it pulls back, it goes higher. And again, this is an example where you had a squeeze, you had a very small 5-minute bull flag right here that then broke over 8 and rips up to about 9. So in this 5-minute bull flag, it's certainly possible that we would have seen a 1-minute ABCD pattern or something like that. It was a very short period of consolidation and then it just rips higher. But in any case, it does rip higher. It does another kind of micro pullback, taps off $9, whole dollar, level of resistance, and then drops back down below 8. So that's a big pullback. So then, when you get a big pullback like that, it sort of pops up off the low, but not with a lot of buying power, just sort of, a sort of low volume bounce, goes a little lower, pops up, pulls back. And now at this point in here, we're just consolidating below this pivot. So if the pivot there was, let's just say 864, let's just say approximately 864. That's the pivot right there, let's say. And the high of day is 9. We could have potentially taken a trade. You can see here how it kind of pops up and dips down, then pops up and dips down. So a possible trade on this could have been certainly the apex point of, in this case, we're saying 864. That would have been the correct entry. That's point 2, which is the top of this pivot. But we might even have been willing to take a starter, as it was sort of continuing to ascend here, holding this ascending support line, maybe over 850. Now, it did break over 850 on this green candle and then dipped back down. But maybe after having done that, now we would consider 850 or maybe 855, the high of that candle. It then surges through. And what do you notice happening right here? In this 5-minute chart, we had a 1-minute pullback. So the first 1-minute pullback after the fresh 5-minute breakout got bought up and it rips there through the highs. So this is an example that I wanted to show you initially as being one that's not necessarily picture perfect. You can tell that it's a little choppier. It's not, it's just not picture perfect, but it clearly ended up resulting in a really nice breakout. This one is a little more what we would call picture perfect. So here on this, which is actually the same stock, just a different day, a year apart or good amount of time apart. Anyways, so in this case, you can see just to get oriented here. So we have a big move from 2 to 3 to 4 to 5 to 6, 300% squeeze. Okay, so that's a big move. We love seeing big moves like that. Does a pullback right here. It then rips higher up to 6, pulls back. Okay, so this is a little bit of a premature first pullback. But again, this is the 5-minute chart. On the 1 minute, we probably would have wanted to trade it because of how volatile this was. And just knowing that the first candle to make a new high in this type of setup could probably easily give us a nice 15, 20 cents. And again, just to define the definition of apex. Apex is, and I think we talked about this earlier, but just as a refresher, because I see the question in the chat, it's that line in the sand. It's the obvious to the penny price. And so that may be, in this case, the top of this pivot. It could be the bottom of this pivot if we break below that pivot point or that apex point, that line in the sand to the penny. That's significant. So, it's kind of the high water mark, right? And if the tide comes up above that, we're breaking it. So new line in the sand. So anyways, in this case, we squeeze up here. It then pulls back. First 5-minute candle to make a new high. It works relatively well from under 7 to up here 7, I don't know, whatever this is. Kind of close to double topping. Not quite, but close. Pulls back. Again, it doesn't break the low of that last pullback. Could you have bought the first green candle to make a new high here? You could have. In this case, because this stock was so strong, it probably would have been worth watching for that type of entry. This isn't a stock where we're talking about a range of like 40, 50 cents. We're talking about dollars a share. So in this case, probably would have been pretty aggressive and on the offensive to try to find those good dip entries. So possibly taking that trade here down in this area and then adding as it breaks through that apex, adding, now looking for an extension of 25, 30, 50 cents through that level. It goes right up to 8, dips down, micro pullback underneath the whole dollar. Then it rips through that level up to 9. So that was a really clean ABCD pattern. And that, if you saw that pattern, now one of the things that I encourage you guys to do, and I've already mentioned this a bunch of times, but to print out slides like this and to put them sort of on your walls. And as an exercise in trying to really visualize these patterns, spend a moment looking at that pattern and then closing your eyes and really visualizing the price action as it's moving higher, as it's starting to pull back, the first bull flag, buying the first bull flag. It goes higher and you take a little profit off the table. You start to see a seller on the level too. I don't love that. I'm going to take a profit off the table. It puts in that high, which becomes our apex or our pivot. It then pulls back again. Then it starts to ascend higher, then it dips again. Where's that level? Where's the line you're watching? It's that previous apex. Then it comes up again, it pulls back. And then as it comes up one more time, you start to see that green on the level 2. You punch it, boom, boom, boom. 3 orders, whatever it is, whatever your share size is. It breaks through that apex. It rips up to the high, 25, 30, 40, 50 cents. It taps the $0.50. You take a little bit out, sell half on the ask. Let it dip down. It does a 1-minute micro pullback. You add back for the break through that half whole dollar, and then the next leg higher. The first 1-minute pullback after the 5-minute breakout. I think by visualizing these patterns and visualizing you trading them the right way, it just helps sort of, I think it's just part of that mindset. And I do that while I'm trading. And I think that's because I've had so many trades that I've taken of this setup that I can visualize exactly how it's going to work. I'm going to add here, I'm going to add into the high a day break, and I'm going to look for that extension through the highs and take a little bit more off the table. And just like that, you've seen me, and we'll see examples here, really clean trades. So surrounding yourself with essentially that vision board of these are the charts that I want to be trading. These are the patterns that I like, and this is how I want to trade them. And it's not to say that you couldn't trade a setup just like this and manage to lose money on it, because you can. I've done it before. You add a little too high on the bull flag right here. You sort of chase it. Then you get stopped out. Then you add back at the very high, and then it dips back down and reverses, and you're the person that lost money on it. So that can happen, but you can learn from that experience, and you can go back and look at the chart and ask yourself, where did I make the mistake, and how can I do it better next time? Okay, so this is a 1-minute chart. And so on this one, we're going to see an ABCD pattern. And this isn't, again, picture perfect, but kind of right in this area here, where it pops up, it pulls back, it pops up, it pulls back. And as it breaks the high of this level right here, you can see how looking at that is sort of the pivot. Again, kind of as per chapter 4 and what we talk about with gaps and windows. If we look at that, is if it breaks through this level, then what's the next resistance? If it breaks through here, then we're looking at a move kind of the whole dollar of 11. If we break 11, we're looking at high a day, and it surges right through real quick. First pullback, first 1-minute pullback after that breakout gets bought up. And this occurred with enough time. You've got 2, 4, 6, 8, 10, 12, 14, 15 candles. That's 15 minutes. That's 3 5-minute candles. Now, again, without looking at the exact timestamp, I'm not sure, the shape of that 5-minute candle. You could figure it out if you sat down, and marked out, okay, well, this 5-minute candle, of course, began at 11 a.m. and it opened here and then closed here, right? You could do that. But just for the sake of argument, this appears to be a bit of a bull flag that was probably forming on the 5-minute chart with a 1-minute ABCD pattern. This one, we could still say that this level here could possibly be a pivot if it breaks over that level. In fact, it did break that and surged quickly. Not perfect, but maybe a 5-minute bull flag there as well. And micro pullbacks back here. But that's the one sort of ABCD setup right in there. And again, it's not perfect. Here's another one. Not perfect, but you can see first we squeeze up, we drop back down, we curl back up, we drop back down. That becomes the high, and that $8 spot, which is at the $0.50 or the whole dollar, psychological resistance. We break that. We're looking at a retest of the high. It breaks and goes almost instantly there. So breakout or bailout, it works almost instantly. It pulls back, gives us a little bit of a 5-minute pullback right underneath the high, and then it goes higher. Drops hard. Remember, when they drop hard like that, buying the first candle to make a new high in the 5-minute, not always the safest entry. It goes a little lower, then starts to curl up, it pulls back, and then breaks. So I don't know if you recall, but I talked about how this can sometimes take the form of this sort of W pattern. And some are really clean, and some are like just super clean, and others are a little choppier. And we don't always, it's a million factors. But in this case, it's not picture perfect, but it does end up resolving. Here's another one. This one's a little cleaner. So we sell off, we rip back up, we then pull back right here. First candle to make a new high, doesn't break through the high a day. It can't quite do it. So it tries to, but it can't quite do it. Then it dips down a little bit, and as it breaks through this level, we would say that right there was our pivot, right? So that level now breaks through there. We're now looking for an immediate retest of the high and a squeeze higher. This is an example where this price range can be difficult in this sort of, this is a, what is this, a $1.60 stock. So you get the breakout and you get like a, in this case, you actually got a nice 80-cent breakout, but that's not typical. Actually, right now, yeah. So right now, just for reference, this is a nice pivot that's happening on SCKT. We have this high back here. I'd already drawn that candle, or that line. I drew the high of this candle here, which was about 1246. And then, lo and behold, it comes back up and hits its head back on that same level. Now, this is not an ABCD pattern right now, even though I guess you could kind of say there's a little bit of a W here. It's in the context of this sell-off. So that's not really an ABCD pattern. Not really is giving it more than it's worth. It's really not at all an ABCD pattern. But it is a stock that broke the VWAP, was below it, got above it, bounced off of it, and is now popped up here. So you may end up seeing through this double top some type of 5-minute bull flag. And I would say, okay, well, if this can break through this 1245 level, left and up, what's the next spot? Up here, and up here, right? If it breaks through 1245, first target's 13. Then 13, well, we could draw the lines here. So we've got 1327, 1375, and then 14. Now, again, really just trying to emphasize more than anything that pivot and that line in the sand that oftentimes is so clear. And if it's obvious to you, you want to make sure, and this isn't but it should be very obvious. So as a beginner trader, if you think it looks obvious, it's probably obvious to a lot of traders. A lot of traders who've been doing this for a long time. So obvious levels, get better follow through. This is that same setup actually. So I'm just going to make a note to pop this one out. This is slide, what is this? 691. Remove. That's HMNY again. And this looks like HMNY again as well. I don't know why I have those in there twice. All right, I'll pull that one out too. 692 also coming out. All right, so this is a nice one. Kind of like what we saw today. Stock squeezes from, as you can see here, about $1, what was the low? $1.50, $1.60. Rips higher, squeezes up through this level, hits hits 350, drops down. First candle to make a new high. We probably would have been okay trading that. I don't see a problem there. That would have been a first 5-minute candle to make a new high. Yes, this candle was sort of a bigger red candle, but it was on lighter volume, not outrageous. So I'm okay with that. But it didn't end up working. It hits 325 and then pulls back. So in that case, we either get out break even, or maybe it's a winner. I don't know. But, we get out, it pulls back, and now we're thinking if it can break 325, well, we do have the high of that red candle right there. So it's got to get through that level. But if it can break 325 and surge through that level, 350 next target. Logical. Now we break through 350, we halt going up. We open higher, we rip right up to 4, and then we squeeze up to a high of about 410. Now that ended up being a pretty darn clean ABCD pattern. And again, sometimes they take that form and they're really clean, and sometimes they're not. And for us, the goal is, at least in my opinion, it's not necessarily about waiting for the picture perfect pattern. It's about trading the right stock. And sometimes the right stock, for whatever reason, we don't know why, but for whatever reason, doesn't give really clean breakouts. It's just choppy. And again, it's just sometimes they're like that. This is almost as picture perfect as it gets. Okay, so here we have the squeeze higher, right? So we have that squeeze from $1.60 up to 240, the pullback, first 5-minute candle to make a new high. A nice bull flag. That is a nice bull flag right there. It resolves. That was a winning trade. But it doesn't go all the way back to the high. And that's okay. This is a pre-market trade. Sometimes they do go back to the high, sometimes they don't. So this bull flag pops up, pulls back, and then right here, as it pulls back, these pullback candles are like picture perfect. They're light volume, they're small candles. It's a little extended off the 9 moving average, but not a lot. And then right there, boom, first candle to make a new high. In this case, I would have been okay with that because of how clean this pattern was. And then we break through 240, we squeeze through the high 260. So that was really nice. So now let's look at a couple of live trades. And as I am saying that, you can see here, this ended up giving us a 1-minute pullback. Sorry, 5-minute bull flag. So 5-minute bull flag right there. And just like that, that's surging back to the high. Now, something like this, the high right now is 1346. So I'll just put this here for you. So it's 1346, and our high a day is 14. So we're kind of in a funny spot here where we're actually going to be watching. Let's see if that halt level moves up here. It just moved to 1381. See that? So it just moved a little higher to 1381. So let's just see whether or not just for the sake of getting a little bit of a live trade on this, whether or not there'll be a nice little trade there through 45. So look at that right there. So see that? That was a quick trade right there. Break through the high. So that's not a home run, but it was like $1,200 of profit. So now you've got 1381. That's what we call a micro pullback. We'll talk more about micro pullbacks here in chapter 8. So the halt level moved up to 1381. It appears that it's going to get halted. I'm holding 300 shares, and I'm going to sell all of them right now before the halt. I don't want to be holding during the halt. Why not? We're double topping. We're coming so close to a double top right here at 14. Now, I knew, because the 15-second timer, if it stays at that level for 15 seconds, it will halt. In this case, I could be wrong. It looks already that it's going to open a little higher. But what's likely to happen, what's very likely to happen on this is that it opens and dips. Now, we may get that dip and rip trade where we buy the dip for the rip. We may not. We'll see what happens. But I'd rather take the profit out in this case just because of the double top risk. So this ended up being a bull flag, a 5-minute bull flag, a very quick one, 12:45. You know, had I been really dialed in and planning on trading it, I would have definitely been a buyer at 12:50. It then gave us a micro pullback right there at 13:50, which if we look at our chart right here, you'll see on the 10-second chart, and that was pretty much instant resolution. And that's the way I like to trade. I like to take a setup where it's going to work instantly, and it either works instantly or it doesn't when you're taking that type of setup. So that worked pretty much instantaneously. Okay, so we got a little trade on that. So why don't we, let's see. So where's that put me? Right there. So that's not bad. Let's see. So the halt time on this, just as a refresher, right? So halt time was 11, 12, and 27 seconds. So resumption is going to be 11, 17, and 27 seconds, 5 minutes from the halt time. So it should be pretty much exactly a 5-minute halt. So we still have like 3 minutes to resumption on it. Maybe what we'll do, let's see. So CAPR, I can pull that one up so it's ready to go. Now this just happens to be a nice example on just in real time of a micro pullback and sort of just that price action, but it's not a great example of the ABCD pattern. So maybe what we'll do is we'll just put this aside here for a second, and we'll jump back in here and look at the ABCD resolution. All right, so let's see. So this one, how long is this? All right, so let me just check my notes on this particular slide. All right, and I'm gonna get those two out. Let's see. Just fixing this one thing. All right, so CAPR. So I said fast forward since a long trade, 45 minutes long and lots of trades. Okay, all right. So fast forward since a long trade. Well, fast forward to where? And give myself a lot of direction on this. All right, so let's just see if we can find, this is CAPR. I just have to see if I can get dialed in here on the ABCD pattern. Looks like this is okay, so I'm drawing the pattern out. So this is, as you see, I'm drawing this. This is me beginning to sort of visualize what's happening, visualizing the pattern. It's pulled back, it's popped up, it's pulled back, and then we're going to look for the continuation through the high. So hang on just one second. Okay, sorry about that. Okay, so let's see. I'm going to move my video here. I'm going to move it down here, this corner. Okay, so CAPR. So we have just had the first 5-minute candle to make a new high, which was the high that candle looks like was about $5 and I don't know, maybe 30 cents. You know, this is not a hugely volatile. It doesn't have a huge range. It's got a decent range, but not huge. So while we could have maybe taken an entry there, I don't have a position on it in this live trading archive. I didn't take it. I probably was just sort of thinking that, you know, after that red topping tail candle and, you know, clearly red sort of pre-market, maybe I didn't have enough of a cushion. I'm not really sure. But in any case, so now as we watch it, let's see if we can start envisioning the better setup, which is the ABCD pattern. So sometimes when I draw this out like this, and then the price action almost fills into the line, that tells me how accurate I am in sort of seeing what this could be. Now, I'm not always right, of course, but in this case, the low is down here at about 5. The high of that, it's already kind of done a little pivot high. And just to check in with the stock, it's got 116 million shares of volume, sorry, 116% gain, 37 million shares of volume. The float on this one as of today is 19 million shares. So it's not a crazy low float stock, and I don't think it was on this day either, but this was a while ago, so maybe. But in any case, notice here, what does that kind of look like at 30? Let's back that up 1 second. It kind of looks like we have a little bit of a hidden seller there. Maybe not. Maybe it's just that 5,000 share sell order that's kind of, putting a little bit of a cap on this, but it feels like we've got a little bit of a wall. And when you get good at reading the tape, you'll start to visualize those walls. And on fast-moving stocks, you'll start to jump in and try to capitalize on trading those walls as they break, as they surge through that level. So right now, it seems like if a break of 30, it gives a quick little burst of volume, right? So, this is when we start to get really dialed in almost to the penny on this type of stock and the way it's trading. So now you can see on the 1 minute, a little bit of a double top right here. My chart was hanging over the side of the monitor into the other one, so it's not a perfect view, but it looks like a double top right here at 37.38. So this one is going a little higher, but it doesn't have enough momentum behind it for that real nice squeeze up to the highs. So right now, we're kind of waiting. Oh, it looks like I jumped in there at 37 to anticipate the break through that level. I got in and I got out. So I got in and I got out. I booked my profit. In at 38, out at 44. 4-second long trade. And that's fine. Now new orders at 51. I can always get back in. Break of the $0.50. Then if it can hold that level, starts to look better for a move higher. So in this case, it doesn't seem like it's able to kind of do it. So, and now we're starting to kind of pull back just a little bit. So let's move this just a little bit forward. So we've still got that top at the $0.50, psychological resistance. It's pulling back a little bit. Now note the time. It's 10:14 and 50 seconds. When will this current 5-minute candle close? Well, in about 8 seconds. We know that 5-minute candles close at the top of every 5-minute mark, right? So 10, 10:05, 10:10, 10:15. And this candle is green, which is fine, but it's still light volume and it certainly didn't break through the high. So now this is kind of confirming that worst case scenario is it's a false breakout on the 5 and it just goes back to the volume weight average price and it fades. Best case scenario is this is the beginning of an ABCD pattern. The 1 minute is still giving us that potential entry back over the $0.50 of 550. It's a 1 minute pullback right here. The 5 minutes, not really perfect, but sometimes these kind of do take a couple tries before they really start to open up. And then once they start to move faster, they're hitting high day scanners, more people are noticing, and then they start moving faster and faster and faster and faster as more volume comes in. But in this particular case, it's still kind of struggling. And now at this point, so we're going to fast forward this just a little bit more, we're still in the 20s and 30s. Okay, and now hold up. When is this current 5-minute candle going to close? 6 seconds, right? It's 10:19 and 54 seconds. So we've got another 5-minute candle, and this one is red, but it's still on light volume. Now, the high of this candle is what we're going to look at as potentially the first 5-minute candle to make a new high for the ABCD pattern to resolve to the upside. So let's see whether or not we get that. All right. So this candle is closing right here. 3, 2, 1. Boom. That candle closed. The new one opens. And it looks like I kind of momentarily go and check something else. This stock was hitting my high day momentum scanner. I pull up the chart. I look at the level 2. I notice it's easy to borrow. That's not always what we love to see. So easy to borrow, maybe a little choppy. Not sure what the float is. I could check here actually. So I'll check the float today. 17 million shares, so I don't know. All right, so let's keep going a little further forward. CAPR. So see how it's kind of right at that 9 moving average? Now, definitely the volume has declined quite a bit. And I can't say for certain, on a day like today, this one probably just would have ended up fading as the leading gapper, which was SCKT, ended up, making this really big move. So yeah, but on this particular day, if this was still the leading gapper, up 120%, leading gainer, a lot of people may still be watching it. So a lot of eyes might be on this stock. There's a seller, but there's volume coming in. Look at that increase in volume. Very clear right there. A little bit of selling, a little burst of red. So we haven't gotten the first 5-minute candle. It doesn't look like to make a new high just yet, but we're darn close. My order's at 55 with my hand on the buy button. Now, of course, I could always get in a little early on this. I could have already bought, or I could be waiting maybe for the break of 38, 39, 40 and add at 48, 49 for the break of the $0.50 and then take quick profit as it breaks through that critical level. So right now it dipped down, it surged up on 2 nice sized green candles. So the 1 minute is kind of pulling back here right under that 38 spot. It's not maybe picture perfect, but you know, it's starting to look okay maybe. And of course, we know that we're going to be watching this for the breakthrough 40. So this candle, you know, we have 2 minutes left on it, roughly. And I bought the dip right there at 33. I decided on this one, I'm not going to wait for it. I'm going to buy the dip. There's 39. There's a seller at 39 and another one at 40. I'm in at 34. I initially put an order to sell at 37 thinking, it looks like a false break. And then I cancel it. I say, what the heck? I'm in 5,000 shares. Let's just give this a second. There we go. Look at that. Even before it broke, I knew what was about to happen. I was able to visualize what was about to happen. That comes with experience. That's educated intuition. Watch this. What we're going to see is a burst of green, a breakthrough 40, an instant apex. And this again reminds us that if we wait to buy upon confirmation, we will sometimes miss the opportunity, which is why often I like to have a little bit of a starter. A starter with smaller share size also means my risk initially is a bit lower. It doesn't always work super well with breakout or bailout because the starter, you're not necessarily going to get the breakout when you're getting in early. But you know the level in play, and with smaller size, it gives you kind of a chance to dip your foot in the water. So now look, we've got sellers on NASDAQ and ARCA for 19,000 and 12,000. So we've got about 30,000 shares for sale. But of course, 41 million shares of volume. And watch, immediately it rips through that level. I add, getting filled at 39, and it goes right to 39 by 53. Then 45. So it breaks, seller comes down. I take my profit out, which was a little, I don't know, a little quick. I'm thinking I probably didn't have a very big cushion on the day. New order here at 550. Hand on the buy button, watching for green on the tape, and then the trade through 550, adding back there, and then taking the profit out as it goes. So in something like this, right there, that trade was 1 second long. From 10:23.31, I sold half at 10:23.32. Right? Now that's a very, very quick trade. And in fact, we had, there was a trade today where I had this, I think it was a break of the $0.50 or something like that, and it rips instantaneously. And it is an instant big winner. Just instantaneously breaks that level. That's the breakout. Okay, so now we're at 60, 55, 52, 50 on the bid. Is it going to hold the $0.50? No, it dips below it, but then back above it. But in any case, you could see how you could trade these differently. I'm getting in, getting out, getting back in, getting back out. Someone else might just be in and hold the whole thing, you know, from that entry at 38 and still be holding. Target is a move through the high a day. And has the 1 minute or the 5 minute chart, if you took a 5 minute entry, has it given us an exit indicator? No, not really. Light volume pullback, high volume, or volume coming in, not necessarily high yet, but higher volume as it's beginning to break out. So now the first 1 minute pullback after that fresh 5 minute breakout, we want to see this resolve and a breakthrough 67, 68. New orders at 75 to add through that next level. There's 64, 63. So I don't buy it yet. What would give me the confidence for that early entry is green on the tape, right underneath that level, right there, right there. I see, and I moved my mouse and missed it. You know, and it's funny how I'll catch that as I'm watching the replay. It's like, what were you doing? You moved your mouse. Why'd you do that? So 65, there was a big stack of sellers all there at 65. But then it breaks that level with like no problem. Goes to 67, 68, 70, 20,000 shares on the ask, and then right up to 80. Another surge through that level. So we can analyze this in different ways. Certainly on the 1 minute chart, you can see how I'm definitely pretty aggressive, getting in, getting out, getting back in, getting back out. So I'm certainly churning shares more, but I keep kind of capturing my 5, 10, 15 cents of profit, whatever it happens to be. This may be a day where I was just feeling that I needed to be a little bit more on the defensive, which you might not think it's very defensive to be adding at the high, but on the other hand, what is to sell as soon as you're up 5 cents. So I get in, I sell as soon as I'm up. Then I get back in and I'm looking for instant resolution and get right back out. New orders at 6. So I'm gonna get in here at 6, right there, and I'm gonna get right back out at 6:05. So in and out, in and out. Very, very quick trades. And that's fine. That's called breakout trading. It's high-speed breakout trading. We're gonna talk about it more in chapter 11, I think. But these opportunities are being presented by the ABCD pattern. The strength of that pattern is what's giving us this follow-through. And of course, initially with that red topping tail candle and sort of this slow consolidation, it didn't really look like it was going to break out quite this much, but it sure did, right up to 6. So someone who bought right down here at 550, the apex point, right now might be the place to be selling, because this 5-minute candle right now is starting to look like a topping tail and is starting to look like it might go red. Yes, we still have 3.5 minutes left on the candle, but now we've gotten our first red 1-minute candle. So that's giving us the confirmation that we're getting a little bit of a pullback, and it may be time to sort of step back off this stock. All right. So, and there you go. For those of you guys that were watching, that are watching the class, we paused class for a moment to trade this move up here on SCKT, which you saw at the very beginning of, but which we kept trading, but which is not really an ABCD setup. So we paused class to trade this, and one of the trades on it, just for reference, let's see, where was it? I mean, you can see how fast some of these were. This is a trade where I was long 2,000 shares at 23. 13 seconds later was selling for 77 cents, some of it. Go back down here. I had one that was like really good. Let's see. This one in at 22.50, out at 22.94. That one's pretty good. Let's see. Where was the really good one? There was one particular one. Well, I mean, that was pretty darn quick. 24.14, out at 24.96, 3 seconds later. So, stocks like this, added here at 22, sold at 22.66. Some of these stocks just move so fast that, you're presented with an opportunity here, which is to either try to capitalize on it the best you can, or certainly use the 5-minute chart as you'd like. But this was a really nice move here from 12.50, which we had dialed in as this kind of obvious line in the sand. If we break 12.50, next target's 14. And we did get the move to 14. And as it turns out, probably some short sellers were getting squeezed there as it ripped all the way at $26 a share. No other ABCD patterns other than the one from pre-market, but definitely first pullback, all as per Chapter 8, Part 1. So I might actually grab some screenshots to this and then just add it to the next time I teach Chapter 8, Part 1. But yeah, so all right, well, let's look at the next one. So here's an ABCD pattern. This is around minute 40, minute 30. Okay, so let's look at this one. Where is it? 4 minutes and 30. Okay, so let's see what we've got here. Okay, so this is a perfect example of a 1-minute ABCD pattern. All right, let's back that up. So let's see, how long was I watching it for? Okay, so what you can see here on this is this stock, ATAI. It's got 5.6 million shares of volume on it, which today we would say feels pretty light in volume, but it's up 79%. So certainly a big mover. Looks like it's the biggest mover that I've got on my level 2 windows here. I'm only up $429 though, so I don't know. Today's doesn't look like it's been a great day. But in any case, it's still early. So we have this squeeze here from $1.20 up to about $1.80. It drops down, bounces off the volume weighted average price. Certainly possible that some people do a dip trade there for the pop back up here, but others might just not be super into buying that first candle to make a new high or the bounce off VWAP with that red candle being sort of as big as it is. So it bounces back up, it pulls back. It does not retest the low. So this gives us what we would essentially say was a pretty clean A, B, C, D pattern, the W for winner. That's what we're hoping for. So the apex is this little line that I have drawn right there at about 888. And then the target is a break through the high a day. All right, so let's see if we get that resolution. All right, so let's see. Oh, this is actually a video of me. This is a video of a video. This is a live trading video archive of me annotating the actual trade, which is why we've got the player right here. Okay, but that's fine. So there's 84. So I add right there at 84, and I bought there to anticipate the breakthrough that level. So let's look at this. So we see there's a seller there, 83, 84, boom, boom, boom. I'm buying there. I'm thinking if we break 84, we break that seller, we're going to go right into that 88 spot. Now in this case, and very common of stocks of this price range, I'm taking 5 cents off the table. It's a small winner, 5 cents. I'll take it off the table. So now the high, we know we've got that $2 psychological resistance. There's 97, 96, 95. Go on, girl. 93, 94. So I sold the rest there. Now note that this has high volume on this candle right here. That's what we really like to see. That high volume is terrific. But it's having the resistance right up there at 2. And on the 5-minute, this 1-minute ABCD pattern was actually just kind of so quick that all we have on the 5-minute is a green doji, and then it continued higher. So we didn't really get a proper 5-minute pullback. It's certainly not a 5-minute bull flag or a 5-minute ABCD pattern. But sometimes when these start to take off, they just keep going. The float shows here is 23 million shares, so a little higher. And now the question is, with the order at 2, am I going to get a quick trade for the break of the whole dollar? And then the target would be 205, 210. So here we go. There's some volume coming in, 94, 95. So that's what we like to see, that little bit of volume coming in there. And then let's see, oops, let's back that up. So volume comes in, and then it looks like we get that quick burst through that level. There's 99, there's 2, right over 2, 202, 205. This is a perfectly good time to take half out. So half on the ask at 204, and it looks like it's not filling yet. So will that order get filled? It did. Now we have a bid at $2, which is good. Is it going to hold that level? If it does, then I could add back at 205. Or I could sell the rest break even. So, sold the rest break even, it looks like, or for a small gain at 97. Now, if it does break over 205, or 207, that's the high a day. So possibly over 205, 207, that would prove it's holding 2, and then we could potentially get another trade on this, which essentially would be what we're waiting for, is the first sort of 1-minute pullback after this breakout of the ABCD pattern. But the problem on this is that this isn't the first pullback after a 5-minute breakout. The 5 minutes just continuing to be extended. And so some traders who use the 5-minute chart may be just thinking, this is getting more and more extended. I want to short it up here. I focus on the 5-minute chart. This thing's up $1 a share. It makes no sense, whatever they want to say. And they might be thinking, I'm going to short it. We don't have a really nice recent 5-minute bull flag to sort of reestablish lower risk. But here we are, little flat top. Is it going to break 207? There's 7, but some red orders going through. There's 7. Feels like maybe a hidden seller there. It can't break it, but there it goes. 8, 9, and then 10. 10 to 12. Okay, so now it's pulling away from 2. If it can accelerate a little faster, we see over 215, 217. Then we're going to start to look for a move up to 225. And again, that increase as more volume comes in. So it's 20,000 share seller there, but there it looks like it's breaking at 14. So now we're starting to rip. Now we're starting to move faster. And this is what I love. This is the type of trading I love. When these stocks start to open up, they start to move faster. This is where I can start to get more aggressive. This is where I can start to rip, some quick trades, jump in, jump out. We've got volume increasing for sure. These volume candles are the highest of the entire day. Yes, the 5-minute is still extended. That's not changed. I just rewound the video so we could watch this again as it breaks over 207, 208. So there we go, 210, 12, and then 13. No, so 12, 11. It breaks, but it's just hesitating for a second. There's 12 on the ask. There's 13. We see the seller at 14. There's 13. There's 14. Seller's coming down. And now we break through that level. There's 18. There's 20. Now it's starting to open up a little bit faster. So, you know, that's the type of price action that we certainly really like to see. All right, so let's see. So let's back that up. So we got the ABCD pattern there. And now let me pull up my next live example. So copy link. Okay. ABCD setup, extended off the 90 MA, then it fails. Oh boy. All right, so it looks like we've got possibly a false breakout here on this one. All right, so here, just to get oriented with what's going on, it looks like we've got a bit of a 5-minute bull flag happening here, right? So it popped up and pulled back. So we've got a 5-minute bull flag. The 1 minute dropped down, popped up, pulled back, started to pop back up here, couldn't break that level, dropped back down again. So sort of a failed ABCD perhaps on the 1 minute, but the logical spot to be watching is at the $0.50 of 14.50, right? Because that's the high here. And if we break 14.50, then we're looking at a move up towards the high of day, 15.39. And this is corresponding with first 5-minute candle to make a new high. So in this case, it looks like I did a little bit of a dip trade on this. I bought the dip around 14, and I'm being a little bit conservative to unwind the position. Clearly, this is a stock that's very choppy, has a very wide range from 1370 up to 1540, and there's back to 1409. So happy to get out some of that break even after that kind of chop. Now look at that. It goes right back to the high. You know, when stocks are trading like that, and this is up, you know, 540%, 32 million shares of volume. When stocks are trading like this, where it pops up, it drops down, I get out break even, and then it keeps going right back up, it feels like this is where we're getting into the chop. And those big range stocks can be harder to manage. Now, I can't tell. So the high of this candle on the 5, my mouse here is on this candle, and the high is showing as 1426. So I think that this actually broke. Let's just go back 1 second to where I first got in. So I was in right here. Did this break 26? It hit 25, 26, and it was double topping right at the first 5-minute candle to make a new high, which I'm having a little bit of a hard time seeing how that's exactly where that's lining up. But anyways, okay. Guess that's what it looks like. So now it drops back down, so we're going to let it come back up. All right, so 25, 26. There we go. It breaks 25. There's 30. And now look at how fast that starts to move. So that's that instant resolution. Okay, so on this one, my first trade was a little bit of an early entry. It was an early entry at 1405 to anticipate the breakthrough 1445. And again, you know, my P&L is hidden, which is the way I trade on a day-to-day basis. You know, even today, I'm trading like this. So I'm not looking at how much I'm up. I'm focusing my eye right here, and then glancing at the chart. And then, you know, every few minutes after I finished a trade, I'll see, oh, that's where I'm at. Good. Okay, now back to focusing right here. If I focus right here and I'm really dialed in, the profits will follow. It's like when you're swinging a baseball bat, you don't stare at the bleachers and let the ball hit you in the face. You stare at the ball, and then, you know, the good home run will happen. It's fine to set the intention that, you know, you want to hit a home run. Or, I mean, I don't know if that's really the right intention with trading. But in any case, it's one thing to set the intention that, okay, I'd like to make, you know, my daily goal or whatever it is. But ultimately, you got to stare right at the road in front of you here, which for me is right here reading the tape. Okay, so anyway, so on this one, I did get in early. And then I added back right here at 1425 for that confirmation. So we got that confirmation as it looked to me as though it was about to break through 1426. And in fact, I'm still in a little bit early, but not a lot early. A little bit early, but not crazy early. So there's 30. And now we see the seller at 50, but we've got that first 5-minute candle. So now we've kind of got the wind at our back, right? The first 5-minute candle is such a clear pattern that so many traders are aware of, and so many traders will be watching, that at this point, I'm not really worried about, with a 32 million share volume stock, a 11,000 share seller. So watch this as it breaks through the $0.50. There's $14.50. So we got immediate resolution of about 25 cents. And there it breaks through that level and instantly goes to $14.95. Now we've got 30-cent spread, 65 on the bid and 95 on the ask. So this might be the type of stock that I would go in and say, hey, let's go check our hotkeys on this for selling on the ask with an offset. So custom orders, remember we go in here and we say the sell half ask offset. So right now I have it set at 10 cents. And maybe that's fine for this stock. Maybe that's totally fine. But I could go in and make it, 5 cents or maybe 15 or whatever I want. Okay, so there's 95. And the question now is, the high a day is 15.45. So am I going to hold this whole thing and or add for the break through the high? Or am I going to, so watch right here. So no, I took half off the table. Took a little off the table, and that was the right move. Right there, it comes right back down. So girl, go lay down. Go on, go lay down, girl. Go lay down. So taking a little off the table and then unwinding the rest, for a small winner, certainly not a home run, but for a small winner nonetheless. So this was sort of an ABCD breakout where it wasn't clean through here, but we finally broke that apex. Then now we're reversing, and this is where we're getting that fail. So because I was quick to take profit off the table, it was a winner. Now at this point, this 5-minute bull flag is also failing. So now the question is, do we wait and give this a chance to do a 5-minute ABCD pattern? Okay, so now it's starting to give us that 5-minute ABCD pattern. It's going a little bit higher. It's sort of double topping right now. And in fact, this seems like it's going to go just maybe a little bit higher. And it looks like I might even try to take a trade in this area, but it is not able to break through the high. So in fact, the ABCD pattern on this is on the 1-minute time frame, which failed and then eventually did end up breaking. And the 5-minute in this example is just a bull flag, which is fine. All right, so let's see. Let me move this here and move this here. All right, so now let's look at the next example. Okay, let's see. All right, here we go. So we're going to look at this ABCD pattern here, which is a quick example. So this is a 1-minute ABCD pattern. Let me just increase the quality here. So what you can see on this stock is Surf. It's up 40%, 3.7 million shares of volume, 33 million share float according to today. And that right there was the apex. So let's back that up. So this ended up being on the 1-minute. So again, you had the stock rip up, pull back sharply, pop up, dip down, and then the breakthrough 20. So could you have bought, right there for the first 1-minute candle to make a new high? You could have. Obviously would have been, a little extended. And with that big red candle, maybe you've been a little nervous, but it did end up going. And here it goes right into that halt level, LULD. So let's back that up again. This is just a short little clip. So the apex point, it looks like, oops, sorry. Why is that doing that? Let's see. You know what? It's my drawing tool again. Okay, so looks like the apex point is right around 20. XTNT I'm separately holding, but that's a different one. So right there, look at that breakout. Just kind of goes right through that level. And even my chart was a little slow to catch up to it, which is a little unusual. Usually my charts are almost instant. But every now and then they do something funny. So it doesn't look like I took that trade, but just happened to be recording it. I think I probably pulled it up and it just happened so fast. I was like, oh, this is a great ABC setup. So let's just grab the recording on that. New order goes at 551, but that's the halt level. It's very strong from 369 up to 550, but do I really want to be buying it right here? Probably not. So there's 551. All right, so a nice example on that one. So let me put this one over here and let me get the next one for you. All right, so I've got another one loaded up here for you guys. So this is KOSS, K-O-S-S. And this is going to be a small ABCD pattern. I think this is on the, well, let's see, where do I take the trade? So it looks like a shorter video. So our levels here, it looks like 450 is the psychological level, $0.50. So if we can break through 450, you can see this is the 1 minute pattern, and the 1 minute is sort of an ABCD, and so is the 5 minute. So this happens that these are both kind of the same pattern, you know, right here at the same time. So look at that. All of a sudden it starts to surge up there, and now we get that break through, well, break through the pivot, and I'm in at about 43, and it pops up there to 58 and then really stalls out. So all of a sudden it just kind of like stops trading. That's not good. Breakout or bailouts would already say, get out of this thing, because when you got in, you were thinking immediate resolution, target, high of day. There's 59, it's not breaking that level. It's just kind of hitting its head here. So this was a fine setup. I mean, well, you know what? It's a decent 1 minute setup over the $0.50. The 5 minute is not an ABCD pattern yet because this candle hasn't closed. This candle right here needs to close, and then the next candle to break over 450 or over the high would be correct. So it's actually a little premature here on the 5 minute chart. So right here, it looks good on the 1 minute, and the break over 43, I jump in it, 6,000 shares, we get that quick break as it surges through that pivot, hits 60, I take some profit off the table, and now the 5 minute is like basically just it kind of continued a little higher, but is definitely not clean. So that's not a great 5 minute chart right there at this point. And so as this comes back down, let's see, it's at 60, and where does it go from here? So there's 59, there's 60. It's struggling to break that flat top. We don't have 5 minute confirmation. I did go ahead and add back at 54 to anticipate the breakthrough 60, and it broke just for a second, couldn't hold above that level, and came back down. And so this is going to end up being a loss on this trade as it comes back down. And the problem here, to be honest, looking at this, you know, with a lot of hindsight, is that we didn't have a clean 5 minute chart. I was trading just on the 1 minute, but this is only up 6%. So why was I even really trading this? To be honest, I'm not sure. I don't know if it was the best stock on this particular day, but it's not that impressive. So I would say, looking back now, that I don't know if this was really the best stock to be trading on this particular day. And the 5 minute chart wasn't clean. So we've got kind of 2 ticks against that trade. All right, so let's look at our next example here, which is another ABCD pattern. Okay, so I'm going to go like this. Okay, so we've got the ABCD pattern here, and let's see what we've got on this one. Okay, so let's get oriented. So here we've got a pullback that's happening right here, which looks like over 92 is the 1 minute ABCD breakout. It's sort of a 5 minute bull flag. PED is up 9%, 1.2 million shares of volume. I can tell this is an older video just because of the way my layout is set up here. But so this may have been the best stock on this particular day. It's sad, but may have been the case. So when I look at percentage gain, all I'm noticing here is that if it's up only 9%, that's just not very much. That's all I'm really noticing there. We know stocks like 50, 70, 100% are certainly the more exciting ones to trade. All right, so the high a day is a little over 90. We're looking for the breakthrough $3. So that was the apex point. I did not buy it there, and I don't recall if this is, you know, an example that I just am showing you as a example and not one that I traded, but in any case, there we go. Okay, so there, all of a sudden, look at that. So what happened at that moment? Let's watch this. Break of the whole dollar. Orders to add at 3. Skips over this order. So on that order, I get a partial fill, right? Only filled 2,000 shares. So I've got 7,000 shares at 99. And now, at this moment, right here, it's hitting high-day momentum scanners. It's hitting new highs. So now, let's see, it's up 15%. I'm taking a little profit there. We know some of those algos are looking at stocks hitting new highs, and certainly a lot of scanners are. A lot of eyes are on stocks hitting new highs. Now, this one, low float, yes. Total volume is low, relatively, 1.5 million shares. Is it going to hold this level and on the first dip over 310? So we can get that break. So, right, we get that pop, the dip, and then that curl back higher. 308, 310, 308, no, 307, 310, there we go. 310, 312, it's struggling here. I mean, this is not moving as quickly as we'd like. I'm doing the best I can on it, but I'm only up $1,000 on the day. So in any case, you can see how that right there was the apex point, right? And in fact, the volume on this really came in as it surged up at the half dollar, or at the whole dollar. Sometimes these bursts of volume, and it's hard to know, initially, I mean, what caused that? Obviously, enough traders that were pressing the buy button that thought it looked good for the break of 3. And there it goes. So you just ride that momentum. So again, not the absolute best, but a small green trade. Okay, and so with that, we are going to continue on to Chapter 8, Setup 3, which is half dollar and whole dollar breakouts. All right, so we'll continue on here.